Hey everybody, it's Mike and Renee with Evangeline Scott with Reliance Home Loans today.
Hi, so excited to be here.
So
And
lovely to have you, and with two women, it's hard to get the word in. So I'm just gonna be sitting here.
Smart
no.
man.
And today we're asking, what does all of this inflation mean for interest rates and for housing?
Well, inflation is not fun, as we are experiencing, right, in everything that we're purchasing at this point. And when you talk about inflation, realistically, in 2022, the Fed is going to play a huge role for us, and they're going to start with tapering off the purchase of the mortgage-backed securities, and that's going to go through about ideally around the March timeframe, it sounds like. And you both have heard, and I think everybody has heard, how the Fed has said that they're slated to do at least 3 rate hikes throughout the year.
Mm-hmm.
That should probably start around May. And so with inflation, I've got some fun notes here. They were teasing me because I went all nerdy and have all kinds of historical stuff that nobody cares but me.
But hey, guess what? We can always put it down, for people
Oh,
to
we can do that.
download.
I have
We
a
can
fun
totally
little sheet.
share.
If you're nerdy like me, then you
Yeah.
can check it out for sure. And so with that, we anticipate mortgage rates to rise with inflation during the first part of the year, probably towards right around 3.75% or so. With the Fed action, when you think about it, you're going to end up having a softer stock market typically, slowing economic conditions.
We're already seeing
Unfortunately,
that.
yes.
Mhm.
But however, when that occurs, interest rates should head a little bit lower, basically towards the latter part of the year, which is awesome because you do have some people that maybe they're a little bit concerned right now for the purchase, and that might put them in a position to be able to go in and secure their property now and look at a refinance down the road.
Can I just interject
Yeah.
real quick, because you said refinance,
Mhm.
and a lot of people have a lot of equity
Yep.
like tied up in their property.
Mhm.
So when is a good time to refinance?
Well, I mean, obviously, people will typically say, I want to get the lowest rate, which is phenomenal. And you do have to look at what is your cost of money and what is that money going to be earning for you. And so, I have a lot of clients right now that are still looking at refinancing because they're doing home improvements. Or they're looking at saying, okay, I want to be able to be in a position then to secure investment property as well. So that's been a huge play because we, especially this last year, we've had folks with more equity, to your point, than they've seen in a really long time, which has allowed them to be able to do a lot with those funds. And with interest rates, quite frankly, still so dramatically low, I've been in the business over 20 years, so I remember when they were a lot higher. And when you look at the history stuff, if you check it out, we'll talk about how when they were about 18%. And so when you think about it from the cost of money standpoint, they're still relatively low. And even when we think about the rate hike, from the Fed fund side and what that's going to end up doing to mortgage rates, it's not going to be something over the top dramatic. But in our world, when we see a 0.25% difference, it's a big deal. People think of it that way.
And fun fact, right? The millennials that are buying right now, they've never seen interest rates more than 6%.
Right?
Right? They're
Yeah.
freaking out if it goes to 6%. We have the perspective,
Yeah.
right?
Yeah.
So,
That's
interesting.
true.
I just thought about
The
that.
perspective of age. A couple of fun little things. We'll talk about some wild cards too. Let's do wild cards. So obviously COVID, number one, is going to still drive how the Fed looks at things and our economy in general. If there does end up being an additional stimulus in 2022, that will probably push stocks higher temporarily, but then cause rates to also go further up. So that definitely is going to be a wild call. And then realistically, just when we think about, again, that runoff of the Fed balance sheet of what that's going to be projected like, again, first step, we're going to see them stopping purchasing the mortgage bonds and treasuries. Next step, they're going to hike that Fed fund rate. They still are buying $70 billion a month in mortgage bonds through reinvestments to keep rates low right now. And so when that stops, mortgage rates could end up then moving higher if they choose to 100% stop it, or when move even higher than we possibly thought. So, I think for me, and again, maybe it's the perspective of age, people are still always going to buy and sell real estate. And again, what the money is at versus what you could earn from a market standpoint.
Yeah.
I still always think it's a good time.
Well, it's just fun to be in the industry,
Yeah,
right?
there's wealth in real estate for sure.
Yeah.
Definitely. And one of the things that we talked about a couple weeks ago was if you do have equity, like 40%, I think of, or actually most Americans have 40% or more in equity now. I just heard that statistic somewhere, not sure where, so, like maybe don't quote me. But if you have equity just sitting in your house, it is a good time to maybe leverage that so that it's working harder for you. To your point earlier, your money can work harder for you other places than just sitting in your bank or sitting in your house.
One of the biggest thing that I see when we look at, there's a couple of things when you think of equity. So my first, fun thing that I always nerd out is on equity repositioning. When we have clients that have multiple investment properties and we're looking at an entire portfolio, and maybe I have one that has, a 30% equity, 60% equity, etc. We can adjust that, level out the equity across the board, free up funds to then purchase additional investment properties. Second part really ends up being with folks and their consumer debt. And so a lot of times people say, yeah, but I already have this rate, and if I refinance and do a cash out, then my rate's going to go, let's say 0.5% higher. Awesome. So what's that interest rate on that credit card that you're paying? I guarantee you it's above 5% at least, typically. And then when you look at what that difference is in their monthly budget, if we're being able to take care of that and then put them in a better position long term, again, it always depends how long you're going to keep the house, what are your goals, and we're all happy to have those conversations with you all the time.
For sure. We've been working with you for almost 20 years now.
I got to tell a fun story to a client yesterday. I remember when I helped you. You weren't in real estate yet, only Maic was.
Yeah.
And you had the minivan still.
Yes.
I love it.
I think we had to roll the minivan
Yes,
into
you
the lounge
did.
just so
Yeah.
we could qualify. Yeah.
Yeah.
So she's phenomenal.
Oh,
We love
thank
her,
you.
and
Thank
we
you.
appreciate that you came on the show today.
Yeah.
I think I want to make this a more frequent occurrence if you're okay with that.
Always.
Yeah, cool. So I don't know, last words, Renee?
Well, just thanks for tuning in. And if you have questions for any of the three of us, please reach out. Our contact info, as always, is below. And we'll see you next time.
Take care.
Bye-bye.